Hello, and welcome to the June Economic and Market Update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. May marked another generally good month for stock markets, although in some cases the news was mixed. Here in the U.S., the Dow did best with a gain of over 2%, and the S&P 500 was also up slightly, but the Nasdaq ticked down. International markets did better, with developed markets up by over 3% and emerging markets up by over 2%. Bonds also continued to do well last month for the second month in a row. What drove these returns was the continuing improvement last month in both the pandemic and the economy. May saw significant medical improvement, with the month ending at case growth and death rates not seen since the start of the pandemic. On the economic front, layoffs continued to trend down significantly, down by almost a third during the month. In other words, last month both the medical and the economic news just kept getting closer to normal. We're not there yet, but we are getting very close. New case growth, for example, was down by more than 2/3 to the lowest level in over a year, and deaths were down by over a third. Positive testing rates were also down by over 40%, and closed the month at the lowest level of the pandemic so far. The improvements are due to continued progress in vaccinations. Over 4 of 10 people are now fully vaccinated, and over half have had at least one shot. In many states, the numbers are even better. If current vaccination rates hold, projections are now that we'll reach herd immunity by the end of the summer, and maybe even sooner. So with the medical risk continuing to fade, reopening has accelerated. 46 states are now expected to be fully open by the end of June. With businesses open and shoppers shopping, weekly layoffs dropped by almost a third in the past month, and expectations are that job growth picked up again as well. Consumer confidence remains close to pre-pandemic levels, and spending continues to improve. The consumer recovery is very much on track, and the business sector is also doing well. Surveys show strong confidence supported by the strong earnings growth of last quarter. And with the ongoing reopening, business now expects that to continue, despite some signs of slowing. And that's helped keep markets close to all-time highs at the end of the month. Markets look forward, not back, so this is a very positive sign. We're not completely out of the woods, of course. Although the medical news is much better, vaccination rates continue to slow, which could put further gains at risk. More, although hiring has picked up, there may be signs of slowing, and confidence is pulled back a bit from the peak. Despite the very real improvements, we still have work to do to both contain the pandemic and get the economy back to full health. But despite those risks, things do keep getting better. Weekly layoffs are down by almost half since the start of the year, and with more reopening, those numbers are likely to improve even more. As people move back to work, that should push consumer incomes and spending up, and high levels of confidence will also be a tailwind. The economy is healing fast. Risks are still out there, of course, especially over the short term. But looking forward, normal keeps getting closer. The pandemic looks like it may be effectively over, at least for the moment, as the statistics are now back to levels of last spring. And on the economic front, with the job market healing and confidence back, risks have come way down. The bottom line here is that across the board, things kept getting better in May. And we're still on track to get back to something like normal within the next couple of months. While last year ended on rising risks, this year things just keep getting better. And that should keep happening. We're getting closer and closer to normal. And we may well reach it this summer. And that would be a good thing. That's it for this update. Thanks for watching. Join me in July for the next monthly update, but until then, be sure to check out my daily blog, The Independent Market Observer, for more timely comments. Stay safe, stay sane, and stay healthy. We are getting through this together.